If Nvidia crashes, there are 3 AI stocks that could actually benefit from the chaos. And Wall Street analysts are already positioning for this rotation. Here's what smart money is buying while everyone else panics. Number 1, AMD. Advanced Micro Devices just crushed both Nvidia and Broadcom this year with 99% gains. Why? Because they're becoming the number 2 option that big tech needs as a backup supplier. Raymond James just slapped a strong buy rating on AMD with 38% upside. The company's server CPU market share hit 40% in 2025, and their AI data center revenue is exploding even though it's still tiny compared to Nvidia. Here's the key. AMD is winning the inference game. While Nvidia dominates training, AMD's chips are cheaper and more efficient for actually running AI models. And inference is where the real money gets made long-term because it happens every single time someone uses AI. Number 2, Broadcom. This is the stock analysts say could outperform Nvidia by 2030, up 53% this year already. Broadcom builds custom AI chips for Google, Meta, and ByteDance. They just landed a $10 billion order from what everyone thinks is OpenAI, and Apple is reportedly working with them too. Their custom chips are faster and more energy efficient than GPUs for specific tasks. Big tech wants them because they're cheaper than Nvidia's premium prices. Raymond James has a $420 price target with 23% upside. The genius move? Broadcom doesn't compete with Nvidia directly. They complement it. So if Nvidia falls, companies still need Broadcom's networking and custom silicon. It's a safer AI bet. Number 3. This is the dark horse nobody's talking about. Innodata, ticker INOD. Analysts predict 68% upside. The stock is already up 1,400% over 5 years, beating Nvidia. What do? Data annotation. They prepare and clean data that AI models need to train on. It's the picks and shovels play that works regardless of who wins the chip war. Revenue growth is projected at 53% this year. And as AI scales, demand for quality training data explodes. They work with all the major tech companies, so they win no matter which chip maker dominates. Here's why this rotation matters right now. Nvidia trades at 45 times earnings. AMD trades at similar multiples, but with way more room to grow from a smaller base. Broadcom is diversified beyond just AI. And Innodata is tiny enough that even modest AI growth sends it to the moon. If the AI bubble is real and Nvidia crashes 20 to 30%, these 3 stocks could actually rise as investors rotate into cheaper alternatives with better risk reward. Wall Street calls it de-risking the AI trade. You're still betting on AI growth, but you're not putting all your chips on one expensive stock that needs perfection to justify its valuation. So here's your play if you think Nvidia is overvalued, but AI is real. Rotate into AMD for the chip alternative, Broadcom for infrastructure diversification, and Innodata for the data angle. Comment 1 if you're buying AMD. Comment 2 for Broadcom. Comment 3 for Innodata. Comment 4 if you're just holding Nvidia and hoping for the best. Because the smart money isn't running from AI. They're running from concentration risk. And these 3 stocks are where the rotation is happening right now.